Coming up on Market to Market. Storms slash across the Midwest, leaving high water and damaged crops in their wake. Livestock prices continue to flirt with all-time highs, while grain markets take it on the chin. And one entrepreneur combines land and lake in an attempt to catch a profit. Those stories and market analysis with Don Roose next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. This is the Friday, July 4 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Lower unemployment, more jobs, and records on Wall Street start the sixth year of economic recovery since the Great Recession ended in June of 2009. According to the Labor Department, nearly 290,000 jobs were created last month, pushing the unemployment rate down to 6.1%. The infusion of more than 200,000 jobs for the fifth straight month was the best showing in nearly 6 years. However, many have stopped looking for work, and more than 30 states have failed to recover jobs lost in the worst downturn since the 1930s. While the number of jobs created has risen, orders for factory goods declined 0.5% in May, ending 3 months of gains. And the U.S. trade deficit fell 5.6% in June from the May number, as the U.S. exports hit an all-time high and imports dipped slightly. All the news had the bulls running the bears out of Wall Street during the holiday-shortened trading week. The Dow Jones Industrial Average burst through the 17,000-point barrier to close at 17,068, and the S&P shattered previous records, closing at just over 1985. As the bulls were charging through Wall Street, summer storms were pounding the nation's midsection, and wildfires were burning in the west. A deluge of rain, tornadoes, and damaging winds hit the Corn Belt this week, and as June came to a close, inclement weather had killed at least 3 people and done more than $30 million worth of damage in Minnesota alone. Mother Nature's month of rain ended this week, but not before leaving her mark across the upper Midwest. Tornadoes were limited, but severe weather was not. Hail damaged several acres in central Iowa. Near a dare, field after field looked like a weed eater had been taken through it, knocking over several hundred acres of corn. The torrential rain caused problems on busy roads, even washing some of them away. In the eastern Iowa community of Fairfax, the foundation of this highway was washed away and a section of pavement collapsed. Hawkeye State Governor Terry Branstad toured this location, offering assistance to those affected. The governor has passed disaster declarations in just over 10% of the state.
But there's a lot of crop damage. We flew over, and so there's a tremendous amount of crop damage. Yeah,
all of it.
Yeah, all over. I mean, there is in western Iowa, too.
The month of June was the third wettest on record, almost double the month's average. Illinois state climatologist says their region was also in the same boat. 4 of the past 5 Junes have been wetter than average. This year, it was the 8th wettest on record. Several states have well exceeded twice the normal rainfall for the month of June. As pumps and tile lines work to drain the water, the damage left behind in area farm fields has yet to be determined. The old saying, rain makes grain, is holding more weight in government reports. According to the USDA, 95% of U.S. corn and soybeans are listed as fair to excellent. The rain has also slowed the harvest of the winter wheat crop. USDA estimates put 43% of the crop in the bin, which is 5 points off the 5-year pace. The latest drought monitor from the University of Nebraska indicates slight improvement, as most of this week's rainfall fell in areas that were already cleared from drought status. At the other end of the scale, drought conditions are beginning to take their toll in the West. Wildfires are still ravaging California and Arizona. This fire in northeastern Arizona has charred more than 2,000 acres in the White Mountain Range. According to the National Interagency Fire Center, nearly 900,000 acres have been charred this year, which is actually less than the 10-year average. Like trades in the stock and commodity markets, farming is all about finding the right combination of timing and inputs to turn a profit. With the help of university research, many have sought the optimum combination of seed and fertilizer or specific animal breeds and feed rations in hopes of finding a money-making combination. Some Midwestern entrepreneurs have embarked on that search, taking their cue from centuries-old farming techniques which combine land and lake in one place. Last fall, Josh Bittner examined this growing trend.
You may not envision fish tanks on the prairie as the best place to look for added value amidst large agricultural operations. Nevertheless, some folks in America's heartland are giving it a try. Whether it's a hobby developed during the off-season or an entrepreneurial foray into niche markets, sustainable, self-sufficient aquaponics systems are hatching in some unexpected locations. Though history suggests a rudimentary form of aquaponics existed in ancient civilizations, the modern blending of aquaculture and hydroponics has increased steadily since the late 1990s. Industry standards were developed at the University of the Virgin Islands, where the warm climate facilitated large-scale operations. Further north, though, the use of indoor aquaponics as a hedge against extreme summer heat doesn't seem that far-fetched to some. The symbiotic closed-loop method offers the opportunity to turn a small profit by growing crops typically cultivated in other regions of the country.
Aquaponics is popular as a concept now and is going to be popular as an industry practice very soon. I would say in the next 20 years we're going to have a lot of our produce in the Midwest coming from aquaponics.
Higher education has continued research into the science of this hybrid discipline. Promising scenarios have emerged for one-time curiosities to evolve into viable green operations.
Aquaponics is a synergistic relationship between plants and fish. Basically, you feed the fish food. That protein then breaks down into nitrate that can be used by the plants, and the plants strip the nitrate from the water, cleans up the water for the fish, and then the whole cycle continues.
An emphasis on education and conservation are central to the mission of the Leopold Center for Sustainable Agriculture. Located on the campus of Iowa State University, the center seeks to reduce negative environmental impacts associated with farming and develop new revenue streams for producers. Leopold Center funding supports extension outreach efforts like those of fisheries and aquaculture specialist Alan Patillo. He and other instructors educate and advise students and the public on the science, economics, and marketing aspects of sustainable aquaculture.
A lot of people wonder, how do you grow plants in water whenever you can overwater a plant and it starts to die? Well, the reason is we maintain a higher oxygen concentration in the water than you would be able to maintain in the soil. You get very fast growth rates out of the plants, but you also get two products, fish and plants, and the combination of those two can make you more profitable.
All kinds of plants can be grown in this environment, though herbs and leafy greens currently are the most common crop. And for those lured to try their luck raising fish, a certain African species just might be the perfect catch.
Okay, he's a good size.
Right now we're using the Nile tilapia, and that's a very popular species to use for aquaponics. It's very easy to grow. It has a lot of tolerance to poor water quality, which for a beginning fish farmer might be an issue for them.
Oh, who's the TV star today?
Iowa State Extension helps local producers kickstart operations that seek value in the spaces between the traditional monoculture of corn and soybeans. Earl and Jeff Hafner operate early morning harvest near Panora, Iowa. The father-son team says for generations in their family, farming is the only life they've ever known. Firmly rooted in their role as stewards of the land, the Hafners began to incorporate their vision of sustainability over a decade ago.
The whole farm's organic. Small grains, the wheat, the rye, the buckwheat, corn, soybeans, and also the pasture and forage for the cattle, because the cattle's organic. You have to protect the environment. You know, every farmer out here The soils is life. The plants and the animals are his life. Anything that destroys the environment would destroy his livelihood or his kids' future's livelihood.
After discovering aquaponics, Hafner helped pass his free time while serving in the military overseas by reading up on the subject. Upon returning to Iowa, he expected to simply start a new hobby.
What intrigued me the most is Grandma was a big gardener. I always liked to garden. However you plant your garden, and as most people know, then you have to go plant your corn and soybeans. You come back 30, 40 days later, and you about know what your garden looks like.
Noting the crucial value of water during his stint in the Middle East validated the importance of conservation to Hafner, and aquaponics presented an opportunity to keep precious resources from going to waste.
What I like about it is technically the only way water leaves this greenhouse is evaporation and transpiration. And that's the sustainable part of it. As water, we're in a drought now. As the world population gets bigger, water is the huge issue. We've been blessed here in the Midwest. We might experience some of how tough it is down in Texas and some of those places.
After receiving a grant from Iowa State to continue his work in aquaponics, Hafner took a hard look at the economics of the endeavor.
If you wanted to raise cattle, you went to the banker and said, I'm going to raise 100 head of cattle. He knew there's industry standards. He knew the numbers. And when I was looking at the numbers, it was tough to find numbers on it. So that's where I said, I'll open my books up. And my first year was rough.
Despite initial hurdles, Early Morning Harvest pressed on, learning from its mistakes. Refining methods over time allowed the Hafners to share their newfound expertise with others.
If you have a CSA and it's a 2/3, 3/4 of a year type operation, you could add a small aquaponics greenhouse to help fill the gap. Maybe keep your labor year-round that way.
The free-flowing exchange of ideas has helped this growing field build momentum. For those dipping their toes into new markets that could be lucrative, Iowa State offers online resources as well. The Agricultural Marketing Resource Center and the National Market Maker site present information on business planning and connecting with buyers.
If you're a small producer, you can find all those people within the community that are interested in getting your product, and they can see you. One of the nice things about aquaponics is that you can start very small and scale it up. Find your customer, find your client that's going to want your product, and as you've seen in this kind of system, you can create extremely high-value products.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market Report.
Livestock prices hit all-time highs to round out the trading week shortened by Independence Day. Grain prices, however, were on a downward slide, experiencing a large drop after Tuesday's government reports. For the week, September wheat lost 14 cents, while the nearby corn contract moved nearly 33 cents lower. Tuesday's USDA report revealed larger than expected soybean stocks, pressuring the August contract 78 cents lower. Nearby meal prices followed suit with a downward move of $29.55 per ton. In the softs, cotton continued its second week of losses as the December contract gave up $2.79 per hundredweight. In the dairy market, August Class 3 milk lost 70 cents, while the deferred contract gave up 93 cents. The big story continues to be in the livestock price sector, where prices hit new records as the August cattle contract gained $3.88. August feeders advanced $3.30, and the August lean hog contract improved by $1.78. In the financials, the euro gained 4 basis points against the dollar. Crude oil declined $1.81 per barrel. COMEX gold fell by 60 cents per ounce, and the Goldman Sachs Commodity Index lost more than 12 points to settle at 651.45. Here now to lend us his insight on these and other trends is one of our regular market analysts, Don Roose. Don, welcome back.
Thank you, Mike.
It was a big week in the grain markets this week. It was a tough week for a lot of producers to watch these prices slide. Let's jump into the wheat market, where we didn't see as big a jump as some of the others. What happened this week to really spark us lower?
Well, I think the big thing overall is this report was a game changer. And really what we did, the highlight was the fact that we brought back some of those phantom acres that didn't show up in the March report. They showed up in this report. 5.7 million more acres, 3.3 million soybean acres, 700,000 wheat acres. And, from there, we also had stocks that were bigger on soybeans, bigger on corn, and it all added up to just a game-changing negative report.
And as we look at the wheat market in particular this week, 14-cent slide on the nearby, on top of slides for the past several weeks. Are we just going to continue trying to find a bottom?
Well, what we did on the wheat market is we reached some kind of support this week. We ended the week trying to go a little bit higher, but funds have been piling into the short side of the wheat market, sitting with a big short, 45,000 contracts. We're down about 50% harvested on the wheat in the United States. We're not competitive. That's one problem. So these technical bounces, I would say 10 to 15 cent bounces, are probably going to see some selling just because the rest of the world continues to sink lower on prices. So it's still a struggle from a big supply of world wheat.
Now, how far out of the money are we versus world wheat?
Well, it changes, right at the present time. This last week we had some sales to Egypt, Russia, and Romania actually made those sales. We were about 10 cents out of the market. So it's not like we're a long ways out of the market, but it's a very competitive marketplace. And the same thing is starting to happen in corn and in soybeans.
Well, and let's talk corn market. We did see the acreage number come out. It was lower than last year as expected, but still predicting trend line yields. A lot of corn this fall.
Yeah, our acres are adequate, and, they were down just slightly, almost unchanged from the last report, but, still a big number. Particularly, it was a report that ending stocks are probably going to go up in the July 11th report on Friday. So, what's happened is our stocks have quit getting smaller. They're starting to build a little bit on old crop. And on new crop, we're going to take these acres, we're going to put them to a balance table, and that is probably going to be around the 1.8, 1.9 billion. So, it's still a supply bearish market, and crop conditions are the other thing that we're focusing on very heavily. And with the conditions that we have right now, it's still possible to have a yield of plus 170, a remarkable yield when we're 165.3. So that's possibly in the cards, but it's all about weather, Mike, from here forward.
You bet. Now, as you're speaking of weather, we've got a question came in on Facebook for our Market Plus segment that's on our website. And it's a question a lot of producers have been asking, particularly in the Corn Belt that we're faced with these high winds, heavy rains. Jamie in Wagner, South Dakota is asking, his thought is that for every acre lost from flooding, 100 acres get a perfect rain. Is that sort of the way the market's treating these weather events that have rolled through the Corn Belt?
Yeah, some of these old adages really hold true, Mike, and that's the one is rain makes grain, and it really is true because you have some areas that's devastating. We've also had some high winds. We've had a lot of excess rain in areas, but the other good areas are really making up for it around the country. So it's just too many areas that are too good versus too small areas that are struggling. So it's unfortunate for the people that are struggling, but it usually doesn't hold a lot of water.
All right, now it's a game-changing report. New crop corn, should producers be making sales?
Well, we're going to come back after the 4th of July, and 85% of the time, how we start out on Monday after the report is the direction that we go. So watch it pretty close, into the end of July. That's usually we slide if we start out lower on Monday, which it looks like it now. We think that there's possibly another 50 cents weather premium in the corn. When you're sitting around 4.15 on December corn, you can still push down into the 365, 370. So catch-up sales with decent weather, we think makes some sense.
All right. Now let's take a look at soybeans. Really, the big story from all of Tuesday's report, both new crop and old crop were hit pretty hard with surprises. Talk to us about the old crop soybean number. What changed?
Well, really what happened is, we did have a report that the acres were bigger, like we talked about, much bigger. Then what the government did is made some adjustments on the old crop stocks. And really what it boils down to is our last year's soybean crop was understated probably by about 60 million bushels, about 7/10 of a bushel. So rather than having a 44.0 yield, you have a 44.7. So What it means is we're going to have bigger stocks than we thought. We're going to start harvest down in the Delta the first 2 weeks of August. So the market took a lot of risk premium out of market. There's probably more to come. We broke through a head and shoulders formation that's been there on soybeans since April 1st. Downside targets on November beans are 11.20. The next stoppage is 11, and then the next after that is 10.88. So, you need some weather to find some, give us support back on this market again. We're oversold right now, Mike, so you have to be a little careful.
All right. Now, as you look at the new crop soybean market, you mentioned the trend setting here on the Monday after the 4th. Same story in soybeans. Keep an eye on Monday's grain trade.
Yeah, exactly. And, really what it boils down to is the July 4th kind of marks a mid-year development time frame. And if we have the green light, the market takes more risk premium out of the market. And it'll be more in the corn, but also the soybeans, because August is really the time that soybeans are so critical, where we know probably by the middle of July we're going to have about 50% of the corn pollinated. So after that time frame, pretty hard to hurt the yield by more than 10%. So, but the soybeans still holding a lot of risk premium, we think. So that's probably the market that has the most vulnerable if the crop development continues okay.
Okay, and you talk about being the most vulnerable. USDA earlier this year released their 14-15 marketing year average of 965 or so for soybeans, and a lot of producers kind of scoffed at that number. It's been a while since we've seen beans below 10. After looking at the acreage and this year's carryout, is that pretty realistic, do you think?
No, I think those are downside objectives. Now, a lot of it is going to boil down to what happens with the producer. Does the producer sell, aggressively? Does he store? Does he look at the insurance program? So it's going to be, if the weather is favorable, it's going to come down to the producer. Then we're going to look and see if South America's crop development. But, if we've had 4 years of struggle in the United States with crop development and off and on around the world. If those acres around the world come into production along with big yields, we are going to come under some pressure. And, when you look at prices all the way out to 2015, we're still 11.37. 2016, you're over 11. And even 2017 soybeans are just under 11. So there's still some hedgeable opportunities all the way out there.
All right. Well, now let's take a look over at the livestock markets. This has been just a roller coaster ride for producers, and probably a roller coaster ride for folks trying to buy meat for their 4th of July barbecues. As we look at fat cattle prices, the live cattle hit another record this week, 155 on the board. Is this, to use a term that's in vogue, sustainable?
Well, one thing, the fireworks came early in the cattle market. There's no doubt about it. I mean, we had a lot of activity, and we traded up $4 a hundredweight higher on Wednesday, really shocked the trade, 158. In the Corn Belt, 158 to 160. Is it as sustainable? The big surprise is the fact that the consumer purchasing has been really aggressive. So it's been all about the consumer buying. He's willing to buy beef, buy pork at these record levels, and it probably comes back to the economy. Maybe some of it comes back to pent-up demand from the winter, but for whatever reason, that was the difference in the high price beef and pork that we have right now.
So as we take a look at the next week, do we anticipate with the 158 trade for this to keep rising?
Well, I think when you look at these prices right now from a risk management standpoint, there certainly is more downside than upside if anything goes wrong. It's kind of the perfect storm, really. The consumer, we looked at the unemployment figures low. We're looking at the economy, low interest rates. It's finally all coming to fruition, and he's spending money. But those good times, you have to be very careful because the stakes are very high from a risk management standpoint. You've got a lot of break-evens on cattle that are in the low 150s to the low 160s. Those are big, huge numbers and a lot of risk. So upside, I would say, is limited. It felt like to me that we had a blow-off type of market on this week on cash cattle when we topped 158 to 160.
Okay. Now, you mentioned the very high break-evens for a lot of producers. And, of course, these feeder cattle prices are feeding right into that. Record highs again, 217 August feeder cattle. Same question, is there still optimism for this market?
Well, when you look at the feeder cattle, I mean, it is, we have some big profits coming out of the fat cattle market. And what's happening is I think the feedlots are willing to pay higher prices for the feeder cattle, partly because of that. The grazing conditions have really improved, and so trying to grow these feeders longer than normal, but is it sustainable? I think when you look out to May of 2015, feeder cattle are trading under 212, so probably the same type of thing. It's all fine until it ends, but these markets, when they go vertical, you have to be very careful because that's not a solid market. A solid market is one that builds over time or breaks over time, and this is a market very much like corn was when it went to $8. Shoots up, and you have to be careful. It gets overbought, and anything can happen.
Advice to producers, risk management wise, what's the best way to play this for calves perhaps coming to market this fall or maybe into next spring?
Well, there's no doubt that you should have a strong risk management program. If the break evens are too high for you, make sure you buy some insurance with puts on the downside. You can sell some calls into the mid 160s to cheapen that up. But some kind of a formula that makes sure that if something happens strange, like the BSE that we had in 2003, we went down 7 days in a row limit. Those are the type of things that you have to guard against when the times are so frothy like they are right now.
All right. Well, let's take a look over at the hog market. Speaking of frothy times, we're back up into record territory at $130 on the hog side. Again, is this mostly PED related? Are we still worried about the loss of hogs?
Well, we definitely are talking about the PED virus, trying to figure out, what the real slaughter is going to be. I think the slaughter is going to be down in July, August, and September, then maybe start to build if we don't get hit with a PED virus again, a PED virus. But, again, just like the cattle, it's really the consumer. 75% of our pork is sold domestically, and the consumer at these high prices continues to be a purchaser. So, sometimes those things can end pretty fast when you're liable on the consumer. I think for all the meats, watch the movement after the 4th of July, see if the buying pattern slows down or not. But, we do have discounts in those back months, Mike. When you look at December 2015, hogs are trading $25 under 2014.
Things to keep an eye on. Thanks for being with us this weekend, Don.
Thank you, Mike.
That wraps up this edition of Market to Market. But Don and I will continue our discussion and answer some of your questions in our Market Plus segment online. You'll also find audio podcasts and streaming video of our program, as well as links to our Twitter feed, Facebook page, and the rest of our social media outlets exclusively at the Market to Market website. And be sure to join us next week when we'll learn how federal officials, scientists, and hog farmers are fighting back against a virus finding its way into the barn. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com.